Hello traders, and welcome to this episode of Traders Classroom. This is a free one, so you can see what we are speaking about here and how we do it 3 times a week. So you can, if you like this, in this blog post on the website, you will have a button to click on to register for the Traders Classroom. It's monthly payment, so you can see the effects of on your trading immediately, and you will decide do you wish to continue with monthly payments on and on, or to stop. So let us start. My name is Alex, and I will show you now the actual counts, the Elliott Wave counts, and strong support resistance on the DXY, the US dollar index. So first of all, let us start with this longer time frame, so you will have the feeling and you will sense where we are at the moment. I will draw here first one pitchfork channel, because we got a perfect one to be drawn from the bottom to the upside, and it will be not modified, but let it be original pitchfork channel. Okay, so you can see what is happening. We have a breach to the upside here on the DXY, and also you can notice an unusual channel. This is all that we are drawing first, so you can get a sense where the market is at this moment. Actually, with the DXY, you have no doubts is in the uptrend, and is within this channel, which has been formed from 2012 and onwards. We had one wave to the upside, then consolidation, and then downside consolidation, and then upside again, and finally we got let's say, if this is an impulsive wave, we got a 5 or 5th waves up. And as you can see now, the situation is undecided. What will happen next? It looks like the DXY will reverse to this bottom of this channel, but let us see how this can be played out, and what are the counts. I will draw 2 horizontal lines here as strong support and resistances, support for the upside and resistances for the downside. So it's not all black and white, so it's not just shorting the dollar at this point and it is all done. It's much, let's say, much bigger than that in a way. Okay, so let us do the Elliott Wave counts. First of all, let us see this 5 waves to the upside, which were mostly clear, and that is within the longer time frame 5 waves. This is the minor, let's say, 5th wave from a long term, and now we are in the position of reversal, so we are possibly looking at the 5 waves down but we need to see in which wave are we at this point. So if we look at the chart, we can see this clear swings, this rejection from 115 to the downside to 110 and swing higher to 113. That would be the first and the second wave with the triangle consolidation for the continuation. So let me draw beginning, first wave, second wave, and this is the most violent and the most longest and the longest wave, the third wave, and this should be a 4 wave, and this should be an extension wave to the downside, the 5th wave. So let us now do the actual counts. We got the consolidation in the second wave, which can be clearly identified from this point of view. It's not always that clear, but when we get a setup like this one, it's obvious, you know, that we have a consolidation for a further downside continuation. This was a kind of a descending channel, not a descending triangle, sorry, not so clear, but in a form of Elliott wave double combo wave, which we will mark like this. Sorry about that, the alarm went on. So here you had a usual consolidation in the second wave, and then an extension with a break below 109.5 to the downside in the most let's say violent and the longest third wave. So we have reached a strong downside resistance here. That would be like let's say head and shoulders formation for the complete downside breakout if we look at this price action. So like this is a second shoulder forming, and we have the consolidation in the 4 wave, which is not as simple and is not usual, not unusual, sorry. So this is also triangle consolidation with the complex triple combo wave expected to play out here before continuation lower or continuation to the downside. So let's say we are in the middle of this triple combo wave, and I would expect a little more range trading between these two boundaries of this triangle or rectangle, whichever would be formed. We have the first swing lower, then second swing higher, then a third swing lower, then a fourth swing higher, before another test of 102 and the breakout. If this in the case this doesn't prove to be a strong resistance, this zone between 101 and 101.5, then we will have an immediate breakout and the rise to the downside, fifth target, which is between 95 and 96. So how can you trade this? In a way, this could be good. This is actually four-wave trading. So if you are not short from here, then you should be short, let's say, from this position, but only if we get a break below 101. So if we get a confirmed break, meaning full candle break below 101, then you should go short by placing the stop loss in the middle of this triangle and targeting much lower. That is beautiful reward, risk to reward above 2, placing the stop loss above, just above 103, and targeting 94, 95, depending of your risk attitude and your profit capability and your target capability. It should be either to take profit on this one or to take profit on the next one, the next target lower. Okay, in the case that this will prove to be a strong support, and that we got a break higher from here on, bounce higher, sorry, from here. I will remove this for the moment, as we do expect, like the counts indicating to be this complex, to be the complex triple combo wave and not anything else. Then in that case we have a long trade. Let me just show you this wedge we have formed here. So again, you know, this is a combination of the price action, and Elliott Wave is powerful because we are not just using the Elliott Wave technique, what if and then. We are using the proper also price action technique, which gives a higher probability for a good trade, for a profitable good trade, than just using the Elliott Wave probability. So in this case, if we get a bounce from this zone, then we should go long on a break of this falling wedge, and by placing the stop loss below 100.5 and targeting higher to this our indicated point of the 4 wave and the X wave, which is 106. Again, the risk to reward is almost 2, and in the previous case was above 2. So this is actually what we got at the market, and by looking from top to bottom in this analysis, we have identified the trend, we have identified the strong points, and we have identified the counts and the wave that we are in. So if you didn't catch this third wave, then you should catch the 4 wave, either here on the immediate breakout, which is a lower probability, or to use a long trade for one more swing higher, and then going short here for a complete swing down to 95, which is more than a high probability. Any kind of breakout above 106.4 will indicate that we have an invalidation of this downside ride to 95, but that is not much likely. But for the moment, pay attention closely to this zone here indicated on the chart. Let me just draw it. This small zone here. In the next couple of days, will it be before the Easter or after the Easter? We do not know that because of the liquidity on the market, but pay attention to this 101.3 to 102 and trade with this accordingly. If you like this video and what we are doing here in this traders classroom, just hit subscribe and go to the form of subscription and immediately subscribe. The next traders classroom lesson will come at the end of the week, and you will be able to trade and learn which is the most let's say productive method for learning to trade. And also with our partners you have a funded trader account, so you can also find the links on our website, and you can register there and actually start earning profit share from the start. Thank you for watching this and have a nice trading. Goodbye.